Well, joining me for more is Jessica Amir from Moo. Great to see you, Jess. So we've seen Wall Street tumble. Tell us what happened.
Yeah, so what happened was basically that Trump said that he is going to go ahead with the tariffs on Canada and Mexico. And then subsequently, we saw gains erased in a session. So stocks fell to their lows and they're plummeting at a rate of knots. And now we're seeing the Nasdaq 100 and the S&P 500 bring further downside into question. And many are guessing that those key indices could head further south and maybe even touch their 200-day moving averages. So why is all this happening, Olivia, is the question. The fact of the matter is, now that we know Trump means business, tariffs are not a negotiation tactic. They're all about, thinking about not what's going to happen to the economy or the share market now. It's thinking about future-proofing American earnings. And basically, this is going to be a very uncomfortable period for more downside, because the serious question is, now Trump has threatened 25% tariffs on all chips coming into the US. That could seriously upset Wall Street. And that is why we saw Nvidia, Intel heavily down lower, Nvidia down almost 10% at one point. So investors are moving heavily out of chips, expecting a very strong pullback here, Olivia.
Okay, and I guess what were some of the stocks that ended up pushing higher on these comments? I saw some of the defensive ones being like Pepsi. Was there anything else that you saw?
Yeah, so it's a great question. So naturally, when investors do shift to a more cautionary stance, you see stocks like Pepsi, Coca-Cola, and indeed Campbell's, who reports later this week. Find some bids, but it's nothing too out there. Naturally, we do see investors move to defensive stance when they are bunkering for slower economic growth. Also worthwhile pointing out that we did see slower than expected or weaker than expected economic prints overnight, and that is also another factor to the mix. That is why we're seeing investors this year increasingly rotate out of those high growth tech, real estate sectors and move into those healthcares, the staples, the names that we just said. So that is something that is probably going to play out on the Aussie share market today. Particularly worthwhile noting that other staples are probably going to be affected down under as well, because most commodity prices are down heavily today. So there's not much green on the screen. However, we have seen, of course, in uncertainty, we also point out that gold is breaking higher as we speak, and so too is silver. So both of those key commodities are the only two that are pushing up with gains of 1%. So that's something that you might be expecting given the mass uncertainty that's sweeping markets. That's expected to take place for some time.
And sticking to commodities, it's not looking too good for iron ore at the moment.
Yeah, that's right. So iron ore's tracking with a loss this week of about 5%. I wouldn't say the iron ore narrative is down and out. It's just that we're waiting to see some more economic data out of China. And of course, China typically goes through a destocking period. Right now, what does that mean? It means they're diminishing their supplies that they foraged just ahead of Lunar New Year. So they're replenishing those. And after they've replenished those, they typically go into peak buying. And this tends to take place towards April. So I wouldn't be expecting the iron ore price to stay down and out for now. It's just the market is going through a digestion period. We are absorbing far weaker than expected economic growth globally, and that is pushing pressure on all commodities, particularly those metal prices that we've spoken about, iron ore. Also extending that out to the economic growth proxy. Copper is also heading for lower levels as well, as the world, I guess, is really bracing for the fact that we could see slower than expected economic growth continue to come out in due course. Of course, tonight, Olivia, another key read in the US, that could be a catalyst. Will it break commodity prices higher? I guess that is something that traders will be assessing. Our services sector data is out, the ISM services index. So if we do see that surprisingly move up to the upside, then that could be a nice validation that indeed the economy is not doing as bad as feared. But for now, Olivia, the serious concern is what would happen if Trump puts those tariffs on US chips, particularly remembering that Apple, Nvidia, these stocks account for almost 20% of the Nasdaq 100, and most of their costs are tied to importing chips from other countries. Now, what is happening is that Trump is basically saying that he's going to slap tariffs down on all imports into the US. So just reiterating how critical this is, this basically means that these two biggest companies in the world, again, just harping that down, they make up about 10% of the Nasdaq 100. They are facing serious pressure here. And it's worthwhile noting as well, when we strengthen out this argument about chips, we've got to remember that the key components of chips, aluminium, nickel, copper as well, could also face further downside if we do see Trump go ahead with this 25% tariffs on chips. So there's lots of caution here. I'd strongly be advocating for investors taking this opportunity to reposition and look for diversification, look at those staples, look at those healthcare stocks that have been unloved and that are breaking out to the upside. And please do have a look at gold. That is bound for higher levels, and silver is definitely mirroring that, even giving a little bit more punch than gold. So do keep an eye on those local Aussie stocks that can benefit from those prices.
And Jess, what are we seeing with Bitcoin? It's reversed gains following Trump's comments regarding the strategic reserve for crypto, but then the tariff confirmation came through.
Yeah, so I guess cryptocurrencies, they're the most volatile of all markets, but by far they've seen some of the most astronomical returns. So it is worthwhile pointing out that there has been a lot of noise in the sector, but we do know, yes, he has made Bitcoin, XRP, Solana, key crypto reserves. They're not US strategic reserves. So we're still waiting to see the actual detail. It's not really been completely ironed out, if we're 1000% honest from an analytical point of view. So we don't know if the US is going to be buying those key cryptocurrencies and by how much. So there's still a little bit of uncertainty there. But we do know, if we remember what Janet Yellen said just prior to Trump's inauguration, she actually warned that the US were about to miss their debt repayments. And so this is why Trump then quickly launched his own meme coin. And there was lots of speculation about Trump coin being the savior of the day. Could, I guess, the US government now move to buy cryptocurrencies to inflate prices, inflate cryptocurrencies that they want, so they can use those gains to pay back their debt? So that's still the question out there. We don't know what coin is going to be used to offset rising US government debt levels. We don't know what on earth is happening with Trump coin. But basically what I'm highlighting is that there's so much uncertainty. It's best to probably favour where we're seeing considerable flows. So Bitcoin, the biggest, I guess, tracker of Bitcoin, or the second biggest in the world, BlackRock's IBIT ETF, still is garnering considerable flows, despite Bitcoin somewhat being the most volatile of all cryptocurrencies. It's worthwhile saying that we are seeing investors buying into the dip of Bitcoin, but do keep in mind that we don't really know what is going to happen from here until we see a little bit more certainty. So keep an eye on the IBIT, IBIT ETF. Also keep an eye on MicroStrategy. So that's indeed fallen from its highs. MicroStrategy almost owns 500,000 Bitcoins. This is the biggest holder of Bitcoin in the world. And these two instruments do see a lot of trades on Memo's platform globally. Of course, we've got 24 million people on our platform now globally. So it's really interesting to see that trades of both these two investments have been picking up despite the volatility that in cryptocurrency markets. So investors do believe that that the prices of Bitcoin and I guess cryptocurrencies, indeed the ones that have been flagged to go into the US crypto reserve, they could be bound for higher levels. We just don't know how low they'll go for now before maybe coiling up higher over the long term.